Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, here we got Bitcoin. I'm looking at the 4-hour. I've got the Bitstamp chart pulled up currently. Let's go ahead and turn off the drawing tools, and we'll just take a look at the moving averages. Basically got that violent sell-off. The wick got bought up very, very aggressively on that sell-off. What that made me think was is that essentially somebody was not ready for that price to sell off, so they bought it back up and then attempted to basically unload their position before the price continued to sell off. It looked like essentially somebody took advantage of basically like a buy wall that was in place holding up price here, and used that as a liquidity dump, and then we sold back down to the 50-55 second time, and then we got an aggressive buy back up here, saved the 8 and 21 cross to the downside. Currently still positioned underneath the parabolic SAR. We've gotten a pushback up and been able to hold support on the 21. At this point in time, I don't think it's unrealistic that we could flip this SAR back up and get another push here, but I am very skeptical of this price action. We have multiple histograms in a row, essentially above the moving average. We have lost the slope on the moving average on the TD MACD, but we are still on top of it. So this is the typical area we would see a bounce, but usually what happens here is we'll put a bounce up. A lot of times we'll build divergence. So we'll put in a higher high on price action, but we'll put in a lower high on the histogram, and then that divergence will be what essentially triggers the big dump. And then you'll see, honestly, we got the cross back over on the Stoch slope. We got the cross back over on the RSI and moving average for the RSI. But once again, you know, we're essentially just bouncing the 50 line. That's a typical place we would find support and get a bounce. What I'm looking for here is, can the bulls maintain control? And a lot of times what will happen is you'll get like that reflex bounce, come back up, and then you won't be able to get back inside the bullish control zone. So what I'll be looking for is the Stoch slope to come back into the 80 range, which is currently much lower than that. So if we can get sustained price action up here and continue to get a move, I think it'll look something similar to exactly what happened right back here. This is a perfect example. You know, we lose the bullish control zone, sell back off, we get a bounce right around the 50 area, come back up, but we're unable to get back inside of the bullish control zone. You know, we basically just touch into it. So that's exactly what this signature looks like. We're in the bullish control zone, we sell off, we get a bounce right around the 50, we move back up, and then we essentially get rejected. We put in a higher high, but that's the perfect area where we would build divergence, because we're not able to get up as high here, but price action gets up higher. And then again, we lose the slope on the MACD. Now here we're still above it for now, and we essentially are in a situation like this, where we like are losing it, but we're still on top of it. Now if we sell back down below it and then get rejected, that will line up perfectly with this situation. So again, I would expect another push up here to a higher price, essentially try to get at least above 20,000. I would imagine that that's a perfect place for liquidity and like a great area for a throw over. I wouldn't get this close without touching it. I think that's a perfect example of, you know, basically taking advantage of the bullishness of the market, of putting in a new high. But typically in situations like this, what you'll see happen is you'll take out the all-time high and then get like a continuation consolidation, like dump. So even if we're going to get moved back to the upside, similar to, again, to like what gold did, we take out the all-time high and then we go into like an elongated consolidation pattern, like sell-off retracement essentially. And you know, we basically came down here and almost touched the 200 moving average on that last sell-off. I think that's a perfect example of when, you know, we could essentially come up, put in a higher high, and then come back down and just retrace to like 17,000, touch the 200 on the 4-hour, and then kind of see what price action wants to do after that. I still think it's very possible that we get up to like 22 or 23,000. I have quite a bit of confluence lining up at those levels, and don't see any reason why we couldn't, especially if we're going to continue just floating up here. One thing that still has me skeptical in these markets, I know everybody's extremely bullish right now, and we're seeing a lot of like corporate or smart money, or you know, whatever you want to talk about, coming into the space here. You know, everybody talked about how the 2017 rally was fueled by retail, and everyone's talking about how this is fueled by like smart money and hedge funds and all that stuff. we need the two to be in line. It doesn't make sense that we're just essentially retouching the top area one and not finding like strength right now. We're like essentially losing strength at the top of the range, looking more like we're getting ready to put in a double top. I need to see both happen at the same time. I need to see smart money and retail in the space at the same time, and like a continued bullishness. Now we have talked about all these signs and what we needed to see to officially enter like a bull market and see like, you know, some of those massive price targets that we had talked about, and we've done all those things now. We crossed over all the moving averages. We took out the all-time high on every time frame. I'm sorry, we took out the all-time close on every time frame. We took out the all-time high now. So that's when everybody gets extremely bullish into the market, and you start seeing just like dumb money just FOMOing into it. And that's the perfect example for when the retrace tends to happen, because everybody gets extremely bullish at the absolute top, and then you can sell into it, use that liquidity, use that solvency to take profits, and then once again reaccumulate at a lower price after all the dumb money comes in. And in this case, I'm not just talking about retail. I'm talking about anybody that just, you know, FOMO's in at the top. We built divergence right here. Now we haven't actually topped out yet, but essentially on the daily we bounced the slope line, put in a much lower high on the actual histogram, and here we put in a higher high. So from this point here to this point here, we have higher price action on the daily, but we have a lower peak so far on the histogram. Now it's perfectly possible we continue to move up here. No matter how high the price goes is irrelevant at this point, as long as the histogram moves up and we get a histogram higher than 1,162. Now we could continue to move up here. Price action can continue to float up, and we could get all the way back up to like 1,000, 1,100 even on the histogram, and then sell off, and it will still be clear divergence on the daily. So that's what I'm paying attention to now. Again, on the daily, we just flipped this back over here on the Stoch slope, and we are much lower in price action. So you could call this a bullish reset. Definitely could move back up here and have plenty of place. We can get all the way back into the bullish control zone. You know, we can continue up, but again, as long as we put in a lower high below like 91% on the Stoch slope, again, it's going to be divergence on the daily. So we'll see what happens, but again, the target to the downside here would be basically back down to 15.8, 15.9, depending on when we sold off, and the target to the upside would still be, in my opinion, like somewhere around like that 22 to 23,000 range. So I don't necessarily think that we're completely topped out right now, but it's very unlikely that we're just going to blow through 20,000 and then just keep going up to like 25, 30, 250,000. Like, I'm hearing all these ridiculous talks about all this stuff, and I think more realistically what happened was we got a blow off top at 20,000 previously when mining costs were about, you know, essentially like in the $3,000 range, and then we came all the way back down and retraced back down to 3,000. Since then we've had our halving. So if we got a blow off top now and essentially got like 20 to 23,000, somewhere in that range, and then we got a solid retrace, I think we could come down once again all the way down to base mining costs, which would be essentially where miners would step back in, and you know, it would take off a little bit of that selling pressure, and again, that would put us closer to like the $6,000 range. So I don't think it's unrealistic to think that we're going to get a massive sell-off at some point in time still. Our previous bottom when we sold off in March was 3,800. So I think there's a very high likelihood that we could easily come back down to like 6,000. It would be, you know, essentially substantially higher than that 3,800 mark. It would be right at where essentially like the mining cost is roughly based on like the halving and everything. And then it would just, I mean, completely clear out a ton of the market once again in the FOMO, and you would start hearing all the rumors about why it's failing, why it's selling off. You know, it would just look like a double top, and then smart money comes back in right around that $6,000, $7,000 range, and then we could see a legitimate continuation. But at this point in time, we are still looking at basically a move from 3,800 all the way up to 20,000 without any sort of legitimate pullback. So you'll see the green Fibonacci here. You know, that would essentially put us back down to the 618, would be back down to like 7,100. That would be topping out back on top of this previous move, off of like the April pump there, coming off of our low. I think that's very likely at this point in time. It would make perfect sense to me. It would also line up perfectly with the 0.5 from the top of the previous 20,000 back down to the all-time low, or not all-time low, but the $3,000 range basically that we were in 2019, 2018. So once again, the 0.5 and the 618 line up right here between 7,100 and 7,800. That is probably my overall target for this move to pull back to. And, I know people love to say, we took out the all-time high, we're going to the moon. I know people love to say, we're never going below 15,000, we're never going below 10,000. That's typically when dumb money gets flushed out. And especially with uncertainty in the markets, essentially a melt up, potential bubble pop scenario, complete bubble in markets right now, various markets too, not just crypto, but all kinds of assets are in a complete bubble. There's massive amount of money printing going on around the world. You can look at M1 money supply just in the United States, and they have printed something crazy like essentially like 40% more like cash in supply right now since this year. So it's not unrealistic for me to think that these assets are full on in a bubble, and that we've priced in a bunch of like ambitiousness, as far as the big V, as far as like economic recovery, as far as the election. Like all this stuff is all priced in as if everything's just going to go back to normal, and everything's going to be good again. And I just think that's all way too good to be true. It's way too ambitious. The free money could last for years, but in all reality, there's not an unlimited amount of free money that's going to just continue flowing into these things. And typically, we see a run up through December, through Christmas, all that. And then just like the economy normally goes through cycles, the annual cycle is extremely slow in like January, February, and even into March. Especially with like tourism down, we're going to see a lot less travel around Christmas time. So I think that's going to bleed out even more extreme into like the next few months afterwards. And then I think we're going to honestly start feeling the pain from some of this, like realistically. Even if they get another stimulus out there, even if they keep pumping money into these markets, I just don't think that this is like sustainable. I don't think we're going to be able to maintain these levels. What I'm paying attention to right now is essentially some of these random diagonals that I have in here. Basically like the tops that we were finding right here have now found like support on them. So if we break down basically from this like $18,000-$19,000 area, we're going to look to find support again on this green one right here. And if we break down from that one, we're basically looking to find support on this blue one down here, which is going to put us closer to like 15.5, 15.6. But, essentially, we've already come up here and potentially topped, came down to the 236, and then took out that high. So we could now continue back up, keep moving, and then come back down to roughly that same level, come in line with this diagonal, and then call it an actual top on the market. Fake a bunch of people out, get people to buy into the top, and then we essentially see like that throw over come in. And I think realistically that's going to line up, with a lot more like confluence and give us a lot more realistic of a long-term target. I am paying attention to essentially what happens on the weekly. The monthly is a little less useful for me with crypto in general, but I'm looking at the weekly and I'm paying attention to the daily for signs that we are essentially topping out. Which once again, even if this isn't the absolute top, I think realistically the most we're going to see is like another 15 to 20% move in Bitcoin. Now some of the other cryptos, especially like some of the low cap altcoins or some of the mains alts, like not the full on shitcoins, could definitely get another run up. But the majority of them are not even close to all-time highs. We still have Ethereum basically around like that $600 mark, and we're looking for over double that. So we're essentially at like a 50% retrace, of the bearish dump at this point in time. And Ethereum is obviously like one of the majors and probably the most functional of all. And also, you have all this bullish news with everything with ETH 2.0 and all this stuff. And again, it's not even close to the all-time high. So I think we could definitely see Bitcoin consolidate in this area, put in a little bit higher of a high, but I think we're very close to at least topping out this portion of the run. Now, it doesn't mean that we're just going to go back down low again, but I think it's very likely that we're going to go into an extended consolidation period in the very near future and scare out a bunch of this dumb money before we get any kind of like massive move to the upside. So you see what I'm paying attention to. We all know what the warning signs are and what to pay attention to as far as divergence and like realistically what's potentially going to happen in the near future. But on the daily, it's going to look a lot different. As you can see with the indicator oscillators here, I do think very realistically though, we could see that daily push back up and put in like a $20,000 move and then see some of this play out like I was describing. So we'll see what happens. At this point in time, I wouldn't get overly bearish on anything, but I definitely have to stick to my slogan and say number one thing, protect your capital. And, once again, profits aren't real until they're realized. So if you're profitable in this market, like I am, I think the best thing, in my opinion, to do, it's not financial advice, but lock in some of those profits, upgrade your level of living, get that new piece of equipment that you've been waiting for, pay off your car loan, pay off your high debt, high interest rate loans that you have, credit cards, put a little something away. I don't think that this is the best time to just be all in heavy in these markets. I think we are very close to essentially just like lighting the fire of uncertainty. At any point in time, I could just see a massive blow off top or, massive pullback or sell off coming in. But at the same time, like, you don't want to be a no coiner either, the same way that you don't want to be all in. So I am essentially once again shifting profits over into different things, keeping my portfolio balanced and also staying disciplined. We are very close to the end of the year as well, which is when you're going to see a lot of take profits. Anybody that's balances their portfolio, quarterly is going to be looking at the end of the year, looking at this essentially like massive run up from like the $10,000 to $20,000 range or $12,000 to $20,000 range, and looking to diversify their portfolio and move some profits around. So if you're up, anywhere from 40 to 100 or more percent in crypto, you're going to be balancing out your portfolio, and you're going to probably be shifting some of your money out of crypto or into some of the smaller cryptos out of Bitcoin, and probably into hard assets like silver, like gold, some of the other ones that have been consolidating and selling off in the same way that you were taking profits on gold and silver, when we hit $2,030. So, in all reality, I think some of the commodities are going to be seeing, a little bit of a consolidation period and then potentially starting their bull runs. And I think Bitcoin is potentially going to do the same thing. We'll see a consolidation period and then a sell-off, consolidation, and then finally find support, and then we can see an elongated bull run. But at this point in time, I think we've already seen the majority of the price action to the upside for most cryptos. In the same way that earlier this year we were talking about, we had basically seen the majority of the moves for gold and silver. Until we expected an elongated consolidation. And now gold and silver have hit a lot of like the targets to the downside. We touched the 200 moving average. We've essentially seen the Dixie get down to the 200 moving average like we were talking about. We've seen extended consolidation periods. And, very near in the future, we're going to see that rebalancing. So I think realistically, at this point in time, like always, protect your capital, and then we can play it off from there. We'll see as we go into a potential Biden presidency, what's going to go into effect. I think there's still a lot of speculation on, is Trump going to be able to win these lawsuits and potentially take everything to the Supreme Court? Are the Democrats going to be able to win the 2 seats for the runoffs in Georgia and then have a majority in the Senate? There's a bunch of uncertainty that's already priced in at this point in time. Is the vaccine going to be coming out? Is it going to be as effective as it was in the clinicals? Is it going to be able to get to as many people as fast as they're talking about? We're at all-time caseloads right now, all-time hospitalizations, all-time highs, obviously, for like cumulative death count. We're coming off of Halloween, and around Thanksgiving, we were seeing all the people that essentially, we're loosening restrictions and the effects of it taking place around Thanksgiving, and then people were extremely lax for Thanksgiving. So right around Christmas time, we're going to see the effects of all the extremely lax people around Thanksgiving, and then essentially into like January, probably late February or March, we're going to be coming at the 1 year point. So that's going to look extremely bearish as far as case counts and viral loads and all these just horrible stuff coming out, statistics saying that we're 1 year into this thing and we've had this many deaths, et cetera, et cetera. And then on top of that, we're going to have the cumulative effects of Halloween into Thanksgiving, Thanksgiving into Christmas, and then we're going to see all the people that were lax around Christmas, and the effects that that had on, essentially like case counts, deaths, hospitalizations, fatigue, not to mention all the financial aspects of it. And I think we're going to really see all that playing out into like February or March. I don't want to be over bearish on these situations here, but we have been talking about all these things for the last few months. We were talking about all the signs that were leading up to crypto, leading up to all-time highs in Bitcoin, leading up to all the signals we needed to see. We have seen all those signals, and a lot of times once people see that final signal or each of the signals, they're going to get extremely bullish on the markets, and in all reality, that's when you should be getting bearish and expecting a sell-off or consolidation, and that is exactly what I'm seeing right now. If we're potentially looking at the beginning of a multi-year bull run in crypto in the very near future and mainstream adoption, it's going to last for a long time. It's going to be a long market cycle, and there's no reason that it cannot consolidate or sell off before going on this massive move and, once again, shaking everybody out of the market. I'm seeing this all over mainstream TV. Everyone's talking about crypto. Everybody's talking about how it's going to 250,000 now, the future, the moon, all this stuff, and nobody was paying attention, back before when they should have been buying. Now everybody's paying attention at potentially what will be the top once again. And I think it's very realistic. Same way with the stock market. There's a lot of uncertainty depending on what happens with politics, depending on what happens with the big V, depending on what happens with all this stuff. Everything is like priced in bullishly, but I don't really see like the bullish signs playing out in the near future. And I think 2021 could be a really rough year, like, financially, market wise. Everybody is just extremely bullish right now, and it feels like this is the worst time to be bullish. If you wanted to be bullish, should have been bullish the whole time we were bullish. Should have been paying attention to moving averages. Should have been paying attention to all the technical analysis, all the signs, the whole way up. This is the worst time, in my opinion, to be getting bullish. At potentially what's going to be the top. So again, I think we could easily see another 10, 15, 20% move in Bitcoin. I think we could easily see more than that in some of the other cryptos, especially the ones that are still way off their market tops. I mean, you have stuff like XRP touch like 60, 75 cents, and you still have all-time highs of like over $3. So you're looking at like a 25%, 25% of all-time highs. Ethereum, one of the majors, 50% of all-time high. There's so many more that are in the same boat right now, and then even some of the most bullish ones like BNB, Chainlink, are not even making all-time highs right now. So we could see them push back up, take out the all-time high as we consolidate or sell off in Bitcoin, and then potentially see, like a blow-off top retracement, consolidation, shakeout of all the weak hands, and then the real bull run strike. So I think that's the most likely scenario. I think once again that things are extremely overvalued, and there is a lot of bearishness looming in the distance, as well as the end of the year. It's typically a bearish time going into January, February, March. We have bad news as far as all the indecision and all the stuff still going on with the elections. We have the potential negative effects and statistics and everything coming out of like all these holidays, the cold weather, the all the regular stuff that we have going into the end of the year, rebalancing of portfolios, and then on top of that we got the big V. So I think it's going to be a dark couple months and potentially a year going into 2021, and I think it could last the majority of 2021 as far as all these different assets are concerned. And then it lines up perfectly once again with essentially like the cycle and the moving around of assets. We saw gold go on the early run and speculative like big moves up, and silver, and now we're seeing copper trail behind and some of the other ones. So I think it's realistic now that everything has cycled into stocks and then made its way into crypto. And then I think it's more realistically going to cycle back into the metals. So the smart thing to do, in my opinion, is continue to balance portfolios, continue to move your money around, out of the things that are overperforming and into some of the things that are retracing or underperforming. But keeping in mind obviously technicals, but also fundamentals, like more long term and everything. It makes sense that we're going to see some of these precious metals and various different stocks that were consolidating, potentially moving back up, or that were moving up, potentially selling off or consolidating. So that's what I'm paying attention to right now. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly, protect your capital, make responsible decisions. Don't be making bad decisions. This is not a lottery ticket. This is not the time. There is a ton of new people and new money in these markets as far as stocks and crypto goes, and there is a ton of irrational bullishness in both these markets, especially after like our extended runs we've been going on since March, and that is typically when you see the absolute tops. So, you can look at mainstream media, you can look at social media, and you can see exactly what I'm talking about. And if you don't see it, then maybe you were here before, or maybe you're one of the new people and you need to be extremely careful. So there you have it, guys. Sorry to be overly bearish, but you know how I feel. Number one priority, protect your capital. And then also the massive amount of scammers I've been seeing in the space lately. It's absolutely ridiculous. I can hardly put out a video without having to block like 10 comments from scammers. They're just all over the place right now. And once again, their irrational bullishness is just plaguing the space, and no one's thinking with their brains. So, I think this is the number one time to be careful. So, well, there you have it, guys. Crypto Trend Trader, and I'm out of here.